Hello and welcome back to the Bronco Wave. I'm back after a couple of months of break and decided to take another look at gold US dollar. And decided to start off with the big picture. First of all, we had this major high at 2011 towards the end of 2011, where gold made its first really historical peak, all the way up close to $2,000, but a little bit shy of it. So following this, we got this very, very long correction move. I still view this as a wave number one, and this move down as a wave number two, which is obviously a very, very deep correction. And up here at 1045, gold managed to turn around. Following this, we got this massive rally up, which essentially became more extreme over the course of 2019 and 2020. And right now we are already very high with the gold price, but I think looking at big picture, we're not quite there yet. So usually when you have those 1-2 waves, you do a projection to find the target for wave number 3. And in my opinion, the target for this wave 3 that is on the way right now could be in the region of $3,730, so all the way up here. Obviously, on the way up there, we can have some correction periods which are longer or shorter, maybe a correction period like this where it's really sudden and fast, and or a correction period which lasts as long as maybe 2 years. But sometime in the future, maybe in a couple of years, we will certainly reach $3,700 for wave number 3. And following this, of course, there should be a correction move again in a wave number 4, and the target for wave number 5 can be determined to be around $5,400, a little bit below $5,400. So this is my personal big picture for gold. And if we look at the short-term perspective for gold, so right now we're in a correctional phase, and this can be counted really nice as an ABC correction move, which in turn forms a wave A, and ABC move upwards, which in turn is a wave B. And if we use trend-based Fib extensions and place those markers here at the top and there, we can see that this ABC move, so that's in Elliott wave terms, it's a classical zigzag because you have this 5-part move up, a 3-part move, so 3 waves sideways, which is the wave B, and another 5-part move up, which is looks like an impulsive move basically, and which forms the wave C. And this ABC zigzag is basically perfect because it extended right up to this 100% extension. So wave A and wave C have the same length, and so this is a projected target for this wave B, and indicates that this pretty much is a correctional pattern upwards, which in turn indicates that there should be another move down following this B move up. And usually when there's such a short B move, this C will be lower than this A. So in my opinion, we will see another new low, which is lower than this, maybe in the low $1,800 region. And right now there's just the question, is there so this is 1, 2, 3, 4, 5. This should form the first move down, but we will have to see about this. But essentially, it doesn't matter if right now we just get one more low and then another wave B up and then another low, or if this is just a wave 4 and we get a heavily extended wave 5, so this would go away, this would go away, and this would go away all down here, and we could see just another 5-part impulsive move down, because in those commodities there it is not unusual for wave 5s to extend, but usually in impulses that point upwards and not downwards, so we will have to see about this. But essentially one possibility is that we get a wave A which finishes somewhere around here, close to 1900, maybe a little bit below at 1890 or something, and following this a wave up which is a wave number B, which should not create a new high which goes above this, and yeah, following this a move down, and again there I'm looking at the low 1812 region. Right now we can also have a look at the indicators, so I will always like to combine Elliott waves with the MACD, because there you can always have a glimpse whether a value is whether a value is oversold or overbought, basically, because it measures average prices and puts them in perspective to in comparison to previous prices. And basically you can see that all the way down here this MACD was very low, and which indicates that this is a heavy sell-off and that there's likely to be a turnaround somewhere around here. And the same goes for this, yeah, so this MACD went up and it's clearly overbought, so there was another move to come, and combined with this Elliott wave target at $2015, you could make a guess that there was a good chance that a turnaround could occur at this point. So this would have been a very nice spot to enter a trade or something. So obviously right now this is pointing upwards, so this means that right now there's still some room for a move up or a move sideways, because a sideways correction move is also sufficient for this MACD to go back up again, and in turn just to generate a new move down following this. Yeah, but basically I am still waiting for this target at 1812, and if I just switch back to this daily view, let me just show you and just scroll in a little bit. So those are daily candles, and if I just place the MACD right here, let me just choose it. So okay, you can see that on a daily basis we're even more heavily oversold, so overbought, so there's a lot more room down. And if we get a little more complex correctional pattern, like a wave A down, a wave B up, and then another C move down over a couple of days, this would be enough to make this MACD really cool down and maybe go into this neutral area or a little bit into the oversold area, just to create another signal to go back up again. And yeah, basically once this first move is finished and we can decide whether we will get another B move, or this move goes high enough, we can see if we can generate price targets for this move down. But yeah, again, as I said, in my opinion, somewhere in the low 1800s, this is the point that I am aiming for gold, and even a little bit lower wouldn't be bad. So in my opinion, gold is I'm very bullish for gold, and this correctional move that is happening right now, as you can see, is really overdue. And yeah, I just hope for gold that this is not another move like this, where basically this was the end for, I think it was 8 years, 9 years or 9 years correctional phase. which I hope is not the case. But judging by all the circumstances with Corona and everything, there's a good chance that gold will not yet go down very low and in a long correctional phase, but instead just correct relatively sharply and then turn back up again, and yeah, hopefully go even deeper into this $2,000 price region. I'm fairly certain we will not reach this upper target at around $3,700 up here immediately. So there will be some kind of correction on the way, and but yeah, right now I think this is just a correctional move down, and then we will get another very strong move to the upside. But yeah, over the next couple of days, probably something like this, and yeah, I will probably get back to this to gold in a week or so, and then we will have another picture in a couple of days to take into account for the gold price development. Okay, so thank you very much for watching, and see you soon.